Good morning, everybody. Hey, welcome to Thursday, November 7th. I hope your day's off to a great start as we get ready to speak with Dave. Yesterday was kind of another lackluster day, kind of a mixed day on Wall Street. Not a whole lot of gains or losses either way. Um, Today, we're seeing a little bit of a bump. We'll talk about that here in a few minutes. A pile of earnings have come in that we'll talk about. Some popular names that you'll recognize. So hang tight, and we'll be with you in just a few moments.
Mariana there. It's 8:40 now, 20 before 9. The programming munchkin came in, said I hadn't told you all what my name is recently. Well, pleased to meet you. I'm Morning Dave. Time to check in on your money and see what's going on this morning on the markets. How is your IRA and 401k doing this morning? Let's go downtown and find out for sure. Statler Financial Services, downtown Sebring. Phillip Statler is on the line. Phillip, good morning. How are you?
Hey, good morning, Dave. It's Thursday. It's a great morning in downtown Sebring, and glad to be with you this morning.
Gosh, it looks like a gorgeous weather day, which is good because I'm spending the whole darn day outside at Heartland Pharmacy. We're starting our big food drive for the New Testament mission today. I'm hoping we get a few folks to come in and say hi and drop some food on us today. In the interim, we had an off day yesterday, and I think it might be an illustration of the kind of roller coaster we can ride on trade rumors. Yesterday, the story came out that President Trump and President Xi of China may not meet until sometime in December now as they tie the ribbons on the first phase of the trade agreement. Then the news turned positive overnight, so we had a little pink to red tinge yesterday and a skyrocket going off this morning pre-market, right?
Well, we do. And yesterday, we kind of ended up the flip side of what Tuesday was, right? So the S&P managed to be green. The other two were slightly red. Which was the opposite of what it was on Tuesday. So, and then today, yeah, we've got big news coming out of the China talks again, saying that, hey, when we do come to an agreement, that we'll immediately start to taper off the tariffs across both sides of the water. So that's really helping stocks this morning.
Oh yeah, that anything that says the tariffs are going away would be enough to prompt fits of glee from investors. Yeah, your point taken. It was almost an exact duplicate of the day before yesterday. Just mirror opposite. Dow was down by, boy, a rock-crushing 7 cents. So before anybody gets the idea there was a sell-off, it was nothing resembling it, but it was a pink to red day. NASDAQ suffered a little bit, but they're a little bit more import sensitive anyway, so the rumors yesterday about a little delay on the trade talks probably would make sense on NASDAQ. Big news this morning on the macro front, about the only news on the macro front is the first-time jobless claims, and we got some good news on that. 211,000 first-time unemployment claims this morning. That's down 8,000 from last week. Still abnormally low, and best of all, it's a bit of a pleasant surprise to investors, right?
Yeah, it really is. 8,000 less than what it was last month, and then we look, or last week, and then we look at what we expected. We expected 215,000. It came in at 211. So I think that was probably a little bit of a surprise there to the economist.
You know, we're in that point where you and I have always described it as more than full employment. When we start getting down to that low a number, I start almost responding to them as statistical wobble unless we're establishing a trend. And every time we start getting a little panicky with a couple of upticks, we have 2 or 3 downticks for a few weeks. It looks like the employment situation is trend-free and staying abnormally low unemployment, doesn't it?
Yeah, it really does, and so it continues. And that's probably one of the things that'll be I think, for you and I, one of the first indicators that things are really starting to slow down is when we see that jobless claim number start to go up.
That's always kind of the canary in a coal mine as far as a recession beginning. You start the layoffs in earnest with businesses starting to think ahead because the one thing they can control is their cost of labor. And, well, that's always a harbinger of bad news. And so far, at least on the unemployment front, we ain't seeing it, are we?
Absolutely not. We still continue to have a low unemployment rate. And that's full employment. So there should be jobs out there for folks.
Perfectly fine. We're in the middle of earnings season with hundreds of companies reporting. First time in a long time, I found something that you didn't have in the process. Ralph Lauren reported before the opening. Luxury clothing manufacturer beat by 24 cents a share on their earning per share, increased their guidance and beat on the earnings front, so it's not going to be much of a surprise. They're right toward the top of my big winner list. Their stock is trading upward in pre-market trading by darn near 9% this morning. Can you match good news like that on what you found?
Well, I've got more of the other end than you do, but I did have Contour Brands come out, and they're didn't recognize the name either, but it's Lee brand, Wrangler jeans, that type of thing. They beat by 6 cents a share. Revenue though did fall below what was expected. They're seeing some benefits of their prior cost cutting and restructuring initiatives that they've gone through. Because of the revenue miss, they're down today about 2.75% right now.
That kind of breaks the mold from some of the other stock reports that we've seen in response. Generally, they've been rewarding companies that make more money off of less income. They're holding them to that on the clothing side, aren't they?
Well, it seems to be, at least on that brand anyway. Hey, we'll switch gears a little bit. Let's look at some travel and destination stuff. I've got the likes of Norwegian Cruise Line, SeaWorld, Expedia, and TripAdvisor. And for the most part, they're all going kind of the same direction, except for Norwegian. Norwegian actually beat on earnings per share, and revenue beat as well. They had they had a solid quarter, even though they had to, deal with Hurricane Dorian coming through. And so they're on track to achieve their financial goals that they had projected for 2020. And they're trading up this morning about 1.25%. So they're probably the opposite of what most of the travel companies are going to look like today. We got SeaWorld. They missed by 16 cents a share. Revenue also missed sharp decline in revenue because of bad weather days that hit them. They're down 3% this morning. And then let's go to those other two travel sites. We've got Expedia and TripAdvisor.
I got both of those on one list, and I'll bet you know which side of the list they're on.
Yeah, it's the bad list because Expedia missed by 42 cents a share, which is a pretty big miss. That's more than a 10% miss on their EPS. And revenue now was only slightly down from what was expected. They saw some of their key metrics fall really short of what the analysts had forecasted. And then, always the bad thing is they cut the full year guidance. And
there's the poison.
That's it right there. We're down almost 14% this morning, which equates to almost $19 a share.
Wow. Yeah, the selected list that I get, that's the top of my loser list this morning.
Top loser. Well, let's add a little bit under that would be TripAdvisor. They missed by 11 cents a share. Their revenue also came in below forecast. They said they had a difficult quarter, more difficult than anticipated. They're going to work on some cost structure evaluating and see what they can change within their structure. They did declare a special cash dividend, $3.50 a share, but that's not going to be enough to buoy them up today. They're down 8% this morning before we get started.
That's interesting because I don't think there's a travel company that came up with good news except for Norwegian. And you've got an update as far as their stock pre-market performance on my list, which is more delayed than yours. They're making a little turn, evidently, because I had them on the losing side as well, just because the entire sector is getting sold off this morning.
Well, I'm sure, yeah, because of those. Looking back at retail a little bit, we got Party City. They came out, they lost 28 cents a share for the last quarter, and they were expected to actually break even. So that was a pretty big miss on their part too. Revenue was below the forecast. So they're suffering bad today. I'm sure they're not a big enough traded stock to be on your list, but they're down 42.5% this morning. They will open at a new 52-week low at $3.54 a share right now.
Holy crud. No, yeah. They aren't on my list. I got time for one or two more. Give me some good news.
Well, good news is a little harder to find. But I do have another popular name, not good news, but a popular name. Roku, the TV
Oh yeah.
streaming service. They lost 22 cents a share. Now, I guess that was good news because that was 6 cents better than expected. And so revenue also came in above estimates. However, their shares are really under pressure um, because of some losses that widened earlier this year. And they've spent more to acquire new subscribers, which is one of those things that the whole television industry kind of fights with. And they're down 14.5% this morning.
Well, the world is just full of merry sunshine this morning. Setting the
Yeah.
table for it yesterday was, like I said, one of those mixed days. Dow was off 7 cents. That's flat as a pancake. NASDAQ was off by about 0.25%, down 24 yesterday. And the S&P managed to eke out a $2.15 gain in an otherwise pretty flat day. 45 minutes before we opened this morning, Phillip, all the merry sunshine that you're showing up, I'd expect red ink, but we mentioned trade. And that's buoying us up. Where are we going 45 minutes before trade opens?
Hey, the stock indexes are really highly green today. So we've got the Dow up 0.5%, $139. We've got the S&P and the NASDAQ up a third or better. That's $10 on the S&P 500, $32 on the NASDAQ. So things are looking good on that side of the deal. However, gold and silver both trading down today. By about a third to 0.5%. Gold's down almost 0.5% this morning. Silver's down 1/3%. So looking not so good there. Crude oil is going the opposite way that you and I like it to go. It's up to $57.20 a barrel, up 1.5% from where it closed yesterday.
Well, poop. Yeah, the overseas markets were all green as well. Asia pretty much evenly green at the close early this morning. Europe trading up midway through their trading day as well. Phillip, advice always needed as to how to stabilize without getting too tempted by boom market times. That takes unbiased advice. How do I find you?
Devin, give us a call at 382-0037. One of the things we want to help people do is coach them into and through retirement. It's a different mindset than when you're trying to grow your portfolio. And so give us a call at 382-0037 to start that process with our financial x-ray review. And then join us every weekend where we got a lot of good information out there on our radio show. 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on your sister station, News Talk 7:30 a.m. And now you can stream it online, and I hear you got an app now.
Absolutely. We got apps on both Android and iPhone as well. Phillip, thank you so much. We'll catch you tomorrow morning. Fair enough?
Fair enough, man. Have a great day.
Appreciate it. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. I really appreciate it. If you like what we're doing, please like our page at Statler Financial Services. We love doing this, keeping you guys informed. And then join us this weekend for our radio show. I just got informed that we'll miss noon, but we'll be on at 6 a.m. on Saturday, and we will be on at 10 a.m. on Sunday morning. Have a great day. I look forward to speaking to you again tomorrow.